XHB stock. This is the Homebuilders ETF. And I wanted to take a look at this stock because it's flying. What are the dynamics? What are the fundamentals that are driving XHB stock as high as it is? What's going on with the mortgage rate? What's going on with the housing market? When you look at this, you break it down, you could easily argue, well, it should come down, or you could easily argue it'll go much higher. There are a lot of variables. One of the things is interest rates are going to remain higher for longer. That's not the end of the economy. This is the normal economy. We were in an abnormal economy with excessively low interest rates. We're now normalizing. Because of that, a lot of individuals, a lot of investors who haven't been around for, say, 20 or 30 years investing don't understand these dynamics as much. I wanted to kind of break things down, show you some historical perspectives as to what's going on, why XHB stock, the ETF for home builders, may keep going higher. Let's jump in. If you're just joining me for the first time, thanks so much. Make sure to hit that like and follow button. What I do here, first, I'm D.H. Taylor. I break down those markets from the perspective of economics. What's driving what and why? Here we're looking at XHB stock. This is the Homebuilders ETF. There's a few out there, but this one's sort of the granddaddy of them all, if you will. There are some people who prefer others for many reasons. We're just going to kind of break this one down in particular. And as you can see, in the past month, XHB has lit up. What happened? What drove that? What's going on there? Let's take a look at the 10-year yield. Here is yield on the 10-year. And as you can see, the 10-year was actually about 4.75 at the beginning of the month. And actually towards October, very end of October, the 10-year yield on the 10-year pushed above 10%. It's dropped down considerably since then. A couple events. Federal Reserve looks like they're probably going to stand pat for some period of time. Number two, the economic data we've seen may suggest that the work that the Federal Reserve has done is working, and therefore maybe the Federal Reserve will even lower interest rates. First and foremost, I'm not on that planet. I start from the question of the Federal Reserve just raised interest rates significantly over the course of about a year and a half's period of time, going from near zero all the way up to pushing short-term rates 5.25, 5.5, somewhere in that range. The question I ask is, did they get it right? I almost with nearly 100% certainty say absolutely not. They either overshot it or they undershot it. But unfortunately, what happens with this, they had to push rates up to a certain level, then sit there, wait, and see. So from here, what happens? We've seen some unemployment numbers, initial claims, things like this that are coming in and are starting to show that the economy is contracting a little bit. One of two things will happen. The Federal Reserve got it right and then need to lower interest rates because unemployment starts going a little too low, a little too fast. The initial claims we've seen are starting to move higher and higher, but they're relatively low on a historic basis. Still, it's a positive for now. I believe that employment will moderate, sort of level out, and start getting stronger again. All through 2024, the Federal Reserve is going to have to move further. Regardless, beyond that, if you look at the 10-year yield from a historical perspective, we're still kind of low. Again, we're normalizing now. If you look backwards, say 50, 70 years, this is far more normal. What we were in is an abnormal low interest rate environment. That's no longer the case. Taking a look at XHB from a more historical perspective, going back about about 8 years, 6 years, 7 years, we're near those highs. The end of 2022, all the stock market, equities in the stock market shot up. Then it became solidified. Interest rates need to go higher. All through 2022, we saw a pretty decent sized move lower. Home builders followed suit. Since then, Over the past year, if you take a look at XHB stock, the Homebuilders ETF versus SPY stock, the S&P 500 ETF, they nearly touched right around the first part of April at 0%. So over the past 6 months, had you invested in either one since April, you've done all right with SPY stock. SPY is up about 10.5%, but you really would have crushed it with XHB stock, the Homebuilders ETF. That's up pushing almost 30% in the past 6 months. Let's take a look at the final chart I have here. This is the mortgage rate. Mortgages, by and large, over the past decade and a half, have been incredibly low. We could probably say that in the late 1990s and early 2000, early noughts, between say 6 and 6.5% was fairly normal. Before that, 7 to 8.5% was fairly normal. We're sitting at 7.5%. Very possibly we'll moderate from there. Maybe we get down to 6.75, 7.25. So what's going on in the housing market? Supplies are starting to build up because mortgage rates are as high as they are. Everything is relative, and that's something you got to consider. Anybody who was a home buyer a year ago, 2 years ago, were buying mansions at low rates all the way down sub 3% for the mortgage rate. That's levels we will never see. I will probably never see in my lifetime again. I did not buy. I cashed out and was moving to Mexico. Then COVID hit. From here, we'll probably moderate more with mortgages. Supplies will start to build up. The inventory is moving. I think the latest data points for the inventory was 3.2 months to sell off all inventory, moved up to about 3.5 months to sell off all inventory. So for XHB home builders, if we see moderation in mortgage rates, these home builders are probably going to be able to churn out a lot more supply and make that money because of the increasing in revenue, because of profits from that. XHB could continue higher. Most people who purchased 2 or 3 years ago are stuck in those homes for the next 27 years because their mortgage rates are so low, or they're going to rent out those homes. So anybody who's looking to upgrade in a house will be buying less because the mortgage rates are double. And if you start calculating how that factors out with a 7.5% interest rate or 7.25, 6.75, wherever it may land, you'll see that it's a big sizable difference. So these home builders, if they're able to build up inventory and offer incentives and try and figure out how to sell these homes even more, can probably undercut the current supply levels. With supply levels as high as they are, I can't see XHB screaming much higher for now. But if we do see that moderation in mortgage rates, we're probably going to see home builders start to churn out more and more volume and meet demand. Will interest rates move higher, or are we right about where we need to be? My thinking is we're probably going to be sitting right around here for some time. I don't see interest rates over, say, the next 6 months. I don't see interest rates, the outlook changing much higher or lower. My attitude is interest rates are going to remain where they are until we get more information. Ultimately, my thinking is that the Federal Reserve did not get it right. This economy slows down somewhat and starts going again. And because of that, the Federal Reserve is going to have to push interest rates a little higher. So for XHB stock, I could see this continually trickling up a little bit higher and higher and higher, but eventually coming back down. But this is about a 6-month time frame. So if that's your kind of outlook and you're kind of looking at this, that's what you should be expecting from that, given the environment we're in with interest rates. I continually put out information on the broader stock market, what's affecting each sector of the stock market. If that's what you're looking for from an economics perspective, make sure to hit the like and follow button. See you in the next video.